Hey, what's up? I'm Henry. Welcome to the Wong Mindset. So if you're looking at stocks and you're thinking about real estate and you're not sure which one to put all your time into, I'm here to tell you it's not even close. So I've seen so many articles and videos and people are comparing the two. And a lot of times they're coming out saying stocks are even better than real estate. That if you're even thinking about real estate, you should just go with a real estate investment trust. They're either trying to sell you something or they really don't know. So this is not gonna be the most popular opinion, but let's take a look at some of the pros and the cons. All right, so I'm gonna put in a disclaimer and I'm talking mainly about rental real estate. If you're talking about the home that you live in, then that's not an investment to me, but we'll get into that into another video. For now, I'm gonna say that I'm gonna go over some of the main points. If you want to see all the possible points, I'm going to leave more information in the description. You can check it out. So first off, with stocks, you can get a big gain, right? If you had Amazon back in the day, you could have made a couple %1,000%, you'd be set now. The other thing is that stocks are liquid, right? You can sell and buy in a second. You don't have to wait. Nowadays, with all of these apps like Robinhood, you don't even have to pay any fees. There are no fees to buy or to sell. And the other thing is there's stocks that will pay you dividends, right? So you'll get regular payments from certain stocks. And some of the disadvantages are you can't leverage. If you have $1, you can get $1 stock. I mean, there's margins, but there's also margin calls, right? There's no 30-year fixed rate margin that you can count on. The other thing is you have to sell in order to see your gains, right? There's no way to leverage your principal and get like a line that you can use to do other investments. There's no options like that. And there's no tax benefits. You are not the owner of that company. You do not get to write off anything. So if you go to sell, any gains you have to pay capital gains on. And on dividends, you have to pay taxes on it even if you sell or not. There is one thing that you do get. If you have losses, you get to write off about $3,000 every single year. There's also big cycles that stocks go through, right? It could drop a lot. And if you happen to be in one of the down cycles in retirement, then you're screwed. The other thing is you're really dependent on other companies, right? These companies that you buy stocks of, they are making whatever decisions they want to make and you have no control over that, right? If they make a bad decision and they're gone, then your investment is gone, right? There's companies out there 50 years ago that were one of the biggest companies in the US and you might not even heard of them, right? They could be gone by now. So companies really, to me, I mean, they don't last forever, right? If a business did a strong 30 years, they're already one of the few that made it. Also, companies can cut dividends, right? You're counting on the company to continually increase dividends or keep the dividends, but they can cut it at any time. All right, now let's get into real estate. So one of the advantages of real estate is that you own the property, right? You're the owner of this company and you get all of the tax benefits, you get all of the income. And real estate tends to get less risky over time. If you're in a good location, it's a good building, getting good income, you have less to worry about the longer that you've held it for. And then real estate, you can leverage. You can leverage and get an equity line. You leverage when you bought it with a 30-year fixed rate mortgage. You put down, some people put down 3%, to 25% on residential real estate, but you basically did not have to put the whole thing down. And then when you want to go and sell, there are so many ways that you don't have to pay taxes legally. There's no capital gains on a lot of these things. They set it up so that you can get most of your money back. And the last thing is with rental real estate, once you pay off your mortgage, your income jumps significantly, right? There's no stock dividends that is gonna start increasing a couple $100% after a certain amount of time. There's nothing like that, right? But with real estate, if the income was even comparable, then by the time you pay off the mortgage, then it just blows up. So some of the disadvantages of real estate. First thing, it's illiquid. If you want to sell, it's going to take a long time and you have to pay a good amount of fees to close, right? So that's a long process. Sometimes, it could be a little bit less than a month or it could be 2 months. Also, to buy real estate, it's a high barrier to entry, right? It's gonna take a down payment that's a good size, that's gonna take a lot of savings in order to close on a property. You're gonna have to clean up your credit in order to get real estate, right? That may take some time. A lot of paperwork, that goes into it. There's a long process when you get fully pre-approved, all the way to when you're trying to close. There's documents and paperwork, and it's a long process that you have to deal with. The other thing is, once you have a piece of rental real estate, it's a lot of work upfront when you first get the property, right? There might be renovations, there might be things that you have to get done and repaired before you can rent it out. And when you're ready to rent out, you're gonna have to screen a lot of tenants, and there's a whole process on how to do that. There's ongoing things, but it's really the upfront work. After that, normally, if you've done it right and you've repaired everything you need to repair, you shouldn't hear from anybody for a long time. All right, so what is the Wong mindset on this whole thing? Right, I think that stocks are good when you're first getting started, right? You need something to put it to work. You want it to make money, to build that capital. That's great. But once you have money invested and you have the money to invest in real estate, I think real estate is always the way to go, right? You own the property, you get all the tax benefits, you get all the income, you get all of the appreciation potential, you get to leverage, you get all the tax benefits when you sell, you get all of the benefits as an owner, right? And this is the kind of thing, instead of like companies that last 30 years, real estate, people are always gonna need a place to live. This could last 100 years. This could last 200 years. This piece of land in a good location that's growing, that's making money, that has all these things going for it, people are always going to be looking for it. It's always going to be in demand, right? So I really think that rental real estate should be your end game, right? If you're talking about retirement, you're talking about your generational wealth, you're talking about building wealth, at the end of the day, I think real estate is where it's at. All right, so let me know what you thought of this video. Please leave a like, subscribe, and thanks for watching, and I'll chat with you in the next one.